as it's below or above this trend line. So that's why you want to be very conscious of whatever trend line you're trading. You want to be very conscious of when it breaks, okay, because that's telling you that all of the levels that went into creating this trend line, they're getting ready to fail, or some of them are failing. And what I mean by that is, say you have price going like this on this trend line here. So you have it coming up like this. Okay. You're trading this trend line, yes. But what you're really trading, what makes this a trend line is that you can connect the lows, right? So what you're really trading on this trend line is you're trading this level, this level, this level, and this level. That's what you're really trading when you trade a trend line. So when you see it start to break, you wait and see what it does at this first level. It could break, it could come down to this first level, bounce a little bit, and then you just have a support line now. Okay, you've just got a support line now. Okay, but if it comes down here, breaks this, comes down a little bit, comes back up, retests this trend line, and then falls away and breaks another level, you're probably in a downward trend. And then you can connect that and then continue to see all right, we're back. We're gonna lock this screen in place here, and let's get to it. Let's get to it. Gonna be trading the YM today. We're gonna be doing it through step 2 of the trading combine. So you can see we made $95. This is a 165K account. We're going to be trying to get it to 53K. This will be the first video. You can't make more than 1,000 in a day. I think making 1,000 on the Dow at night is pretty doable. Got the right risk management. I think it's pretty doable here. So we're gonna give it a shot. We're gonna see what we can do. Let's see here. Where is? I can't find my other window. Where is it at? Oh, it's up. It's up top. Okay, duh. All right. So here. We are going to be using a bracket order. I'm sorry, we're going to be using the dome to take orders, I should say. And it's going to be up here on a screen that you can't see. But the reason we're going to use it is so that it puts in our stops for us and we don't have to fool with the calculator, you know, this add position here. Okay. The fool with that, we'll just put it in. We are going to exit the market though. I need another one for that. Let's do this. Let's do this. Let's pop that out there. We're going to be trading the YM today. And overnight delta, and then off on that one. Okay, so we're just going to be looking at these. We're going to be trading this with trend lines. Okay, we're not going to be so much looking at really anything else. We've established that the ATR for the night, the overnight, is typically about 20. Let me show you this here. This is what I did to figure out ATR for the night. So this is when the night starts, and then it ends about 3 in the morning when London opens. Okay, so that's the time that we're trading right now, my time. So we're going to take this from 6. We're going to take the low. Okay, and then we're going to take the high until London opens. London opens about 3 o'clock in the morning, my time. And we're looking at... Okay, we're looking at that for, and you can see it's pretty steady throughout. This is the low of pretty much every day. It kind of falls into this ATR movement. The reason we're grabbing ATR is because we want to be trading in a size that's appropriate for the amount of volatility we can expect. We do have a lot of volatility after this Fed announcement. It was initially bullish sounding when the report came out at 1, and they said we're going to start considering all of the other quantitative tightening that we've did, all the other interest rate hikes we've put in. We're going to start considering those impacts that they have on the market. But then during the press conference, the Fed Chair Powell said very premature to be talking about releasing or cutting interest rates or anything like that. He said it's very premature. So it is what it is. But we're going to go into this night shift slightly bearish. Okay. And we're going to expect a little more volatility during the night than we would normally. So we're in between about, let's take it to 20 so you can see what I mean here. About 20 though, volatility covers pretty much the whole range of the volatility you can expect from this time of night. Okay. It's in there, pretty much in there. Okay, this came out a little bit, but pretty much this didn't happen until, yeah, this is like, it's almost spot on. So the least you can expect it to move, a bar to move is 8. The most you can expect it to move is 20. We're going to bump these up. I'm going to put another 25% on the highest one, and that's what I'm going to use. So I'm going to be using a 25-point stop of ATR. And just to give you an idea of what that looks like on this chart right here. Let's see, I might not even be able to get 25 points. Let's see. I might have to make it. Okay, now this is an average. Some bars are going to move more, some bars are going to move less. But if you get a good entry near a good area, you shouldn't be too worried about it moving too much outside of that. Okay, so we're going to make it 25. We're going to do 32,000, and then we're going to make this 32,025. Okay, that didn't change much. Okay, so this is really the stop that we can have on this market right here. Going to close ATR for now. Shouldn't really change that much. So let's see what trend lines we can put in here. Let's take off VWAP. It's less relevant at night, more relevant during the regular US session. So let's take that out of here. And let's try to get some trend lines drawn and get an idea of what the next move wants to be here. Downward sloping there. Now we've kind of flattened out. Still in a downtrend though. Still in a downtrend right here. Okay. So like I said, we want to buy near. We want to buy near or sell near a resistance. And we got a pretty good one setting up here. So I'm actually going to take this. I'm actually going to take this trade right here, and we're just going to manage our risk. So I'm going to sell the market.
Order filled.
Okay, you see it put in my order there, my stop, and you can see it pretty much lined up exactly what I needed right here. All right, so we're just going to take a few trades, see how this works out. We do have kind of a trend line here, but not really. Hasn't really been testing it a lot. Our goal is going to be to stay above negative 1,000, because if we break 1,000 negatively, we're going to be in breach of the rules, and we're going to have to return to step 1. So let's try to make this fun and entertaining and informational and all those great things. And yeah, see if we can get some trades off here. Our main component, our main strategy is going to be buy or sell near the trend line. Okay, we don't want to be buying or selling in these spaces. So while this was a good move down, this was a lot of space, and as you see, when it returned to it, sold off from it. Now let's see what would have happened had we sold. Say we sold here. Well, that's even less. Yeah, this would have been a nice little trade here. Okay, but we're gonna get in on market orders. They're not, the spread is $3, 3 points right now. You see that? Spread is 3 points. So if you want to get in on the market, you're really going to pay $15 spreads to get in and out of positions. Puts you at a slight disadvantage, but when you want execution, like, you know, you see this coming off of here, just pay the spread. Just pay the spread and get out or get in. Okay. So with about 25 points, let's see, 25 times 5 is 125, and we're going to best about 1,000, and we're going to probably be paying about 135 with spreads. So 1,000 divided by 135, it's about 7.4 trades. We got about 7 trades that we can do here before that we get to a situation where we might be close to hitting a stop if we get to the wrong area. I'm going to be moving to break even most of these trades when we get to this area here, when we get to the stop. When we cover what the stop is in profit, I'm going to be moving to that. This stop looks like it may be a little bit too, couple points off, but that's fine. It's covering the spread, it looks like. I'm trying to always enter my stops when I enter my orders, because the Dow moves very, very fast, and I don't want it to be a situation where before I can even click on stop point, it takes me out. So with the average volatility being 20 right now, and most of these bars will move 20 points in after hours, and that's just going to be from here to here, from 5 o'clock onward. The open of after hours is always more volatile, just like the open of the market and the open of London. Things tend to pick up. Okay, but we've had this big push down here. Okay, we've had this big push down, and now we're kind of churning back up through it. We do have kind of a little supply zone here from the regular session. I only say it's a supply zone because you see as they were falling, this is where they tried to buy, and they were successful here. Looks like this might have closed here, and then the buying pressure continued up. So we're going to include this in our supply zone, but we're really just looking for a quick charge down. I mean, we can get a couple of these bars. You know, we can get an $86 bar or a $100 bar, 100-point bar. We can be at $1,000 pretty quick, and this will be a pretty cool video. So let's look at what volume's doing up here. Without even considering volume, though, look at the candlesticks. What are they suggesting? They're suggesting that they're selling up here because you have wicks. Okay, you have wicks right here, and without looking at volume here, I'm trying to pull it up. I can't find it. Well, it's so low that it won't come up. Let's move it to its own pane. Let's move it to its own pane up top. New pane above. And we'll just take ATR off of this because we know what it is. It's not going to change too much. These bars here though, or this box here, is 25 ATR box, if you notice. So what I like to do is take a copy of this box, and I like to just move it around the candles, and I like to see what candles are inside this ATR and what candles are not. So this one would have been inside this ATR, just barely, but it was. This one's inside this ATR. Clearly this one was double the ATR that we've figured out here. Okay, this one down here was half of this ATR, and this one down here. So if I'm looking at this move, and I do this during regular hours too, I'm looking to see if which moves move outside the ATR more. Is it the down moves or the up moves? And you can see from the beginning of the nightly session, which started at 5, most of the moves outside ATR have come from the downward move. Okay, so we can obviously say that moving to the downside is more volatile, more quick, more violent than moving to the upside, because most of these upside bars, they fit into an ATR. Okay, that we have decided, and that's good to know, because not only does it give you a read on sentiment, but it also tells you that if you are expecting this ATR to hold, you want to be pushing in the direction that is least likely to have the most strength. So if I was betting to the upside right now, and we're used to getting bars that are going down, okay, say I was betting up for whatever reason, not a trend line or whatever, but let's say I was betting up. Well, the down bars have the most volatility. They have the most violence when it comes to their movement, right? They're pushing through more levels, okay? The up bars, not so much. So if I get a good entry, which I think I have a decent entry here, I have a better chance of surviving a push up from the bulls than I do surviving a push down from the bears. Does that make sense? Okay, so we're going to be looking at that, and we're going to be we're going to just keep this in mind. This will also tell you, this little box here, is if your stop is enough, and if your volatility is increasing. Now, if I see something like a big green bar right here, okay, and it's outside of ATR, whereas before all the candles pretty much fit inside, sometimes very well, then I know that volatility is increasing, okay, and I probably need to check out ATR and adjust this, or go up by a factor. Maybe if I'm doing 1.25 in ATR, maybe I go to 1.35 as volatility temporarily heats up. So it's very important, guys, that you know what state the market is in, because you could have the direction right, have the volatility wrong, and you'll get stopped out again and again and again. And like I've likened it to in other videos, it's like driving on a road that has a 60 mile per hour or kilometer per hour speed limit, and you're going 30, you're going half that, and all the cars are passing you and honking and telling you to get out of the way or drive faster, and you're just confused. You're like, what? Why is everyone so mean to me? Well, because you're holding everybody up. The traffic is moving too fast for what you're currently doing. So you need to pick up the pace. If you want to drive slow, get off the expressway or the interstate and get on the freaking regular roads and stop at every stoplight and stop sign. People are on these roads because they can get to from one place to another relatively quickly. So you don't want to be trading too small of a volatility band when volatility heats up. And it's the same way when volatility is less than what you're trading. You're probably giving up too much before you know the move is wrong. So say this market is used to moving by this much, but at some point it changes, and now it's only used to moving this much. Well, if it's only moving on average this much, okay, then all of this, let me copy this before I show you. All of this extra, I'm giving up. And I'm probably not getting a lot of information from this. Okay, does that make sense to you guys? I'm probably not getting a ton of value out of this. I'm just risking extra points. So from 99 to 206, I'm risking 7 points or $35 on every trade, when this band, this volatility here will probably get me, it'll suffice for most trades. So you don't want to be using too big of an ATR when the volatility is low, because you're probably going to be giving up big stops. And on the other side of that, the moves that you can expect to get in profit are going to be small. So imagine if you won this, every time, but you lost this. Okay, you wouldn't be in business long, because you're going to be losing more than you're winning every single time. So you want to make sure the volatility is tailored to your market, and a great way to do that is an ATR. I like to take 5 to 10 samples of what this time of day has been like and adjust them every day, and adjust them for events. We said tonight, going into this, at the beginning of this video, that volatility will probably be a little bit higher tonight because of the Fed announcement. Okay, the Fed's doing something with interest rates. So expect a little bit higher volatility as the market kind of digests that. Okay, and that's why we added 5 points to the 25 points. So we're at like 1.25, a standard ATR. But it could be 1.5, it could be 1.75, it could be 2. You don't know that though if you don't have a starting point. So if I see a bunch of candles moving past this largest ATI or ATR, then I know that I'm probably if the market's probably a little more volatile than I'm giving it credit for, and I would need to adjust for that. Okay. So what do we have going on here as far as trend lines go? We did just make a lower low. We're going to try to delete some of these that don't matter as we go along. We did just make a lower low here. This low is lower than this low. You guys see that right there? Okay, we do have this right here. This is a fair value gap. It looks like it might want to fill. Like it's filling it halfway, but it could just come up and tap it and pull away. But we also have some resistance above here. Okay, so if we're looking at the 50% of this move, okay, we should have been looking to be a buyer. This wasn't a bad entry. It was right below the 50, and it was at a trend line. That's why I took it. But we're going to be trying to remain conscious of all these things: the premium discount zones, what the trend lines are saying, are we in higher low, higher or higher high structure, and what the ATR is. Now it's a lot to do, but if you're using all your tools in trading, it's going to get a lot easier, because we've simplified all of that by using a trend line. Okay, the reason this wasn't a terrible entry, the reason that this was really close to the 50%, was because I entered near this trend line here. Okay, and we talked about that in another video. I think it was the Almighty Trend Line Part 2. So the reason that this entry wasn't terrible, it could have been a little bit more in the premium zone, but it's not terrible because we waited until we entered here. Now, had we been entering down here, okay, had we been entering down here in this area here, we would have been getting a very bad entry to go short, because price would probably rally, take a breath, and rally back to the trend line or a little bit higher than this 50% zone. Okay, so had we taken that trade down here when this candle broke, we'd be in some trouble right now, because that would have been our stop. We would have been out right here above this bar. All right, so by getting in near the trend line when the price action tells you that it's good to do so. Now, if I had a huge green bar tapping up against this trend line and then it closed in another green bar, I wouldn't be shorting green bars near the trend line. Okay, I would wait till it gave me a big wick or a green bar, or I'm sorry, a red bar. All right, so I wouldn't short a bar like this and this and this. I'd wait until I saw a bar like this, and then ideally I like to see some follow through below that bar to show me that we're getting ready to go back down here. So we're looking for follow through in the areas that we expect it to happen at. All right, you've sold down, you've come back roughly 50%, you're at a downward sloping trend line, now you're selling down again. Okay, that's the story that we want to sell. If we're wrong on the story, if it just goes consolidation, consolidation, push up, okay, that's fine. Let this push up, let it push all the way up, let it follow through. All right, and let's look for some more trend lines to get involved. So we already know up here, this is a resistance point. It's come up here twice now. Once here, came down, came back up to it here on the open of the overnight trading. Okay, so we know that this is resistance here. Let's get rid of this for right now. See that? So we're looking for this here, but we could have a triangle forming here. You see that? We could very well have a triangle forming here. Okay, it could come up here, bounce around. Okay, but if I'm trading it, I'm looking to get short in these areas right here. Okay, I'm looking to get short in these areas on weakness. So I could have got short on this weakness here with that kind of stop, and when it traded below, got into that trade, I would have caught this whole bar here. Okay, and then I could have moved my stop to break even, and then it would have moved down again. I could have moved my stop to $100 in profit, and then it would have broke down again. And then when I saw this red bar right here, saw this green bar right here, I probably would have thought about getting out. Okay, or maybe at the latest above here. All right, but that's how we're going to trade. We're going to trade with risk, volatility, and trend lines in mind, and we're just going to see how that works out. So we got about 7 trades in us. Let's try to either use all 7 of those trades or get to $1,000 in profit, because after $1,000 in profit, it makes no sense to continue trading on this account because it's not going to help me. It's going to hurt me, because they're going to require that I get more. They're going to require that I make more money to pass step 2 than I really need. All right, I'm going to let this play out. If I have anything important to say, I will let you guys know. But I'm going to turn this mic off and listen to some music and just, kind of relax. When I turn the mic off, it also allows me to speed up the video. When I edit it, it allows me to speed it up, the parts that are that have no audio. I know I wasn't talking, so there really was probably nothing going on worth talking about. So it allows me to just shorten the video up for you guys. So if you see it speed up and slow down, that's what's happening. I'm speeding up the parts so you can watch this whole thing. I don't know how long it's going to be, but you can watch the whole thing in a reasonable amount of time and not just sit here in dead silence while I do nothing. All right. All right, so we're back real briefly here. You see that we've hit a little bit of profit here, 125. We know we're paying a 3. Well, now it's a $2, a 2-point spread. So that was really like a 135 because each point's $5. So I'm not comfortable really moving my stop to break even yet. If it breaks this low here, that would be probably 2 of our ATRs away. And then we'll be interested in thinking about taking profit or moving the stop down. But right now we're just going to leave it where it is. This wick I don't like, this big long wick here. Okay, but it does show that there is aggressive selling in this market right now. All right, so we're just going to leave this the way it is right now, and we'll be back. All right, we're back again. Okay, so we're about 150 in profit right now. That's not terrible. What I don't want to see is 150 profit turn into a $125 loss. So I am going to kind of tighten this up, but not as much as you probably would like. I'm going to tighten it up about halfway though. Okay, reduce the risk in this. I want to give it a little more room in case it wants to come back and take out these highs. But I don't really want to. I don't want to see this turn into a loss at all. So if it aggressively approaches this, I might have to think about getting out at the market. But I want to give it some room. So I'm reducing risk. The next move will be to break even, and that'll be pretty much removing all the risk. But I got to see it somewhere down here to be able to do that. Okay, because right now we're in the right direction, and I'm not looking to close this trade. I'm looking to add to it. All right, so this is step 2, and this is the beginning of step 2. So I can only play with 2 contracts. After I make this first 1,000, I'll be able to do 3, and then I think they take me to 5 after 500 more. So we're just going to just kind of reduce this risk. If this is going to be a full trade and it comes and knocks us out, we'd be at like a half a trade, I guess. But I'm going to be watching this here because I don't really want to see it come back and take all of this from me and then take some of this back. Okay, but I don't want to move it prematurely either. So you always walk in that line, guys, between do I take profit now? Do I let it run? Do I move it to break even? It's all probabilities. And trend lines can help you with that because as it gets further away from this trend line, okay, you got to ask yourself, what is the chances of it continuing to drop away before it comes back? But if you're operating at trend lines, even when it comes back to the trend line, so say it drops all the way down here, breaks this low, even when it comes back, it should be enough to be below your entry. Okay, because the trend line sees to that as long as it's below or above this trend line. So that's why you want to be very conscious of whatever trend line you're trading. You want to be very conscious of when it breaks. Okay, because that's telling you that all of the levels that went into creating this trend line, they're getting ready to fail, or some of them are failing. And what I mean by that is, say you have price going like this on this trend line here. So you have it coming up like this. Okay. You're trading this trend line, yes. But what you're really trading, what makes this a trend line is that you can connect the lows, right? So what you're really trading on this trend line is you're trading this level, this level, this level, and this level. That's what you're really trading when you trade a trend line. So when you see it start to break, You wait and see what it does at this first level. It could break. It could come down to this first level, bounce a little bit, and then you just have a support line now. Okay, you've just got a support line now. Okay, but if it comes down here, breaks this, comes down a little bit, comes back up, retests this trend line, and then falls away and breaks another level, you're probably in a downward trend. And then you can connect that and then continue to see trend lines on the bottom be taken out. Okay, and then the same thing on the way up. You're trading these levels here. Okay, so if it comes back up to the trend line, comes back up to it, breaks through this first one, you're watching. If it comes back and retests, shoots back up, takes out another level. Okay, so that's how you should be thinking of these trend lines. That's the reason they work. It's not because, you know, they're going to follow this trend line. It's because this is pretty much the halfway point of this move. This is pretty much the halfway point of this move. This is pretty much the halfway point of this move. This is pretty much the halfway point of this move. So when you're coming down and breaking these levels, you're taking out the people that initiated these orders. Okay? So thought I'd put that in there for you guys. All right, let's go back out. I'm listening to Taylor Swift's new album. This has nothing to do with trading, but I only like Anti-Hero. I only like one song, and I usually like all her songs. I don't know why. I mean, you grew up with someone, you like them, but I'm listening to Taylor Swift, and I know if there's any part of that leaks through this video, they're gonna be like copyright claim. So I'm trying not to make that happen. So I'm trying to get off the mic and listen to my music, and then get back on when I have something to say without it playing. So, all right, guys, see you in a minute. Let's see what this trade wants to do. All right, so we're back. I'm going to go ahead and try to get in this trade right here. It's about in my area. It is showing some weakness right here. You got kind of a micro trend going on here if you connect these wicks, but I think it's good enough to risk for 20 bucks. So let's just get in here. Let's sell. Okay, we got a limit order in. So if it wants to move up, it's got to trade through our order, and we'll get the price that we want. So that'll kind of help with the 3 points of slippage that it looks like we're paying right now to get in and out of trades. So, and I'm actually interested in putting both of these stops together. I can't lose on this first trade, so I'm really just in risk of this second trade here, but I could probably reduce this risk a little bit too and bring this down. So let's move it here, and let's see if it gets us in this for the second one. And remember, the thesis is still that we're going to play these trend lines, and we're going to wait until it breaks down below this, closes definitively, because it's poked below it 1-2 times, hasn't closed below it, pop back up. Okay, so that shows you that there's buyers down here, but that also means that their sell stop orders are down here. So I believe we can get a little bit further below here, maybe 10-15 points. You're going to get a big wide ranging bar, and it'll try to take us to our profit. Okay, so let's see what that looks like. We're in 250 profit right now, and we're either looking to get filled, stopped out, or into profit. I am gonna take this lower here. This is really the level right here. Okay, so it doesn't look like I'm gonna be able to get filled here, but I'm gonna give it a second. I'm not gonna mark it in. I'm gonna give it a second and see if it'll come back up and put us in. All right, I'll be back if something eventful happens. All right, so we're getting some more activity below this area here. This was the area they declined to break before. Now they have broken it. I left my order up here. As you can see, we did not get filled. Okay, we did not get filled on that order. So I'm tempted to cancel it and lock in some more profit. But this trend line appears to be holding. I think we're getting ready to get a big wide ranging bar down here though. I'm actually going to place a buy stop below here so that if it wicks down here, I can get out of this trade. Okay. I like this level here. I like that it has come through. Close below it. What did we say earlier?